Welcome back to the deep dive. Today we're looking at London property for 2026, and there's this real tension in the air, isn't there?
A huge tension. It's the main takeaway from all the source material.
Yeah, you have government policy on one side that's aiming, pretty squarely for homeowners' wallets.
And then on the other, you have these market fundamentals just insisting that, well, London will be London.
So that's the collision we're unpacking, this political squeeze versus, well, real life.
Yeah, exactly.
Yeah.
And we need to figure out who is actually going to get hit by all of this.
Okay, let's unpack the centerpiece then. This proposed mansion tax, the reaction to it seems intense.
It should be. It's a significant proposal.
So what's the threshold? What kind of properties are we talking about?
Any property valued at £2 million and above.
And this isn't a one-off thing.
No, not at all. It's an annual charge proposed in the autumn statement.
Yeah.
And critically, it's on top of your existing council tax.
Which is already set to increase from 2028, right?
Precisely. So you can see why they're calling it a body blow.
Now, let's talk about that language. The sources also call it a misguided Robin Hood tax. Why that specific critique?
I think it's because this isn't just about targeting, sprawling estates or actual castles.
Right. It's about taxing what they're calling ordinary success.
Exactly. It could potentially hit a desirable one-bedroom flat just as hard as an actual mansion outside the capital.
And the numbers on that are pretty stark, aren't they?
They are. 85% of the properties that would fall under this tax are concentrated right there in the capital and the southeast.
85%. For how much of a return?
That's the really interesting part. It's only expected to raise around £400 million for the government.
So a massive administrative headache
A huge one.
for what sounds like a surprisingly small yield.
And that headache, that devil in the detail of the valuation process, is what starts to distort the market.
And are we seeing that already? A kind of chilling effect?
Absolutely. The sources talk about a cliff edge forming right around that £2 million threshold.
So it discourages people from buying or selling past that point.
It does. It shrinks the pool of buyers and could drive out long-term residents.
Okay, but then we have this massive counter-narrative.
Yes.
Despite this political assault, as they call it, the overall outlook for the London market is meant to remain steady into 2026. How does that work?
It comes down to something very simple that the analysts keep repeating.
Which is?
London is London.
So it's just insulated.
In a way, demand is guided by real-life decisions, not just policy cycles.
You mean the basics?
The absolute basics. We're talking about having more kids, parental gifts, helping with a deposit, or, and this is a great quote, realizing you're hating your entertaining space.
Right. So life just can't be put on hold forever, tax stress or not.
You've got it. That underlying necessity is more powerful.
So this resilience is really about urgent human need. And that could create shifts within London itself.
It could. The sources suggest this might actually be a positive for some fringe areas. They cite New Malden, for instance, is between Wimbledon and Kingston. And you can still find a family home there under that £2 million line.
And this need to move, it brings up another policy point, doesn't it? Stamp duty.
It does. There's a strong feeling that stamp duty reform is long overdue.
The government missed a trick in 2025 by not dealing with it.
They did. And the argument for 2026 is that policy should be about encouraging movement, not making it harder for ordinary Londoners to get on or move up the ladder.
Which seems to be what's happening. The broader context is that house price growth is slowing down.
The market ended 2025 on a softer note.
And London prices are set to barely budge in 2026. It feels like a year of stagnation.
It does. And if you connect all the dots, the bigger picture is this fundamental tension. You have politically targeted tax policy hitting up against
unyielding human necessity.
Exactly. London's built-in demand for housing acts as this powerful buffer, even against policies like the mansion tax.
And that unyielding human necessity is the final thought, really. If 85% of this new tax burden falls squarely on the capital and the southeast, how might that reshape the long-term value, the desirability of living in London versus the outer regions by the end of 2026? It's something for you to consider.